Monday the 18th, good morning from London. I'm Guy Johnson. Valerie Teitel's here. We're an hour away from the opening trade. What do you need to know? Volodymyr Zelenskiy, backed by European allies, will meet with Donald Trump at the White House later today. We are going to speak to the Ukrainian ambassador to the EU ahead of that critical meeting to get some insight. With US officials appearing to put security guarantees for Kyiv back on the table, we'll also have analysis on what this could mean for European defence spending. And traders on tenterhooks, waiting for Fed Chair Jay Powell's keynote speech from Jackson Hole on Friday. We're going to set that up for you as well. Valerie, markets.
Welcome to Monday. European equity markets are clinging on to some hopes of some breakthrough later today. Euro Stoxx 50 futures up 0.25%. S&P 500 futures also slightly in the green. Euro dollar around the highs of last week, just above the 117 handle. U.S. 10-year yields slightly lower, but it was a very pummeling day for fixed income on Friday. German and French 30-year yields hit 14-year highs on the weakness. The countdown to the opening trade starts right now.
Since the beginning of Russia's brutal invasion, Europe has been at Ukraine's side, united, and we will support you for as long as it takes, for just and lasting peace. And this peace must be achieved through strength.
Volodymyr Zelenskiy side by side with European leaders today at the White House. He's going to meet with them first. He's going to meet one-on-one with the US president, and then there's going to be a European leaders meeting after that. What should we expect? Geopolitics absolutely front and centre this Monday morning. What will it mean for the markets? How should we be thinking about this? We've got it all covered. We're going to talk about defence a little bit later on in the programme, but let's talk about what the geopolitics looks like right now. Oliver Crook joins us from the European Commission in Brussels. Ollie, set the table for us. What's on the agenda? What should we be expecting today?
Yeah, so Zelensky flew here from Brussels, where he stood behind Ursula von der Leyen yesterday, speaking and sort of outlining what the European priorities would be. He is now in Washington, D.C. And as you say, Guy, he will be joined by a number of European leaders: Ursula von der Leyen, Mark Rutte, the head of NATO, Starmer, Macron, Merz, Meloni, we understand. And these are all to basically put momentum into the discussion that happened on Friday between Putin and Trump, for whom many of these leaders saw as really, a fairly negative thing to do: roll out the red carpet, put Putin on a stage for you, talk about economic cooperation, when all of these leaders have put their economies at risk in order to sanction Russia. That is a very high concern. I think the most significant development we got in the last 48 hours came in the form of Steve Witkoff speaking yesterday, saying that basically U.S. security guarantees for Ukraine going forward after a peace agreement are on the table. This is something that the U.S. has explicitly shied away from stating in any explicit terms. But what this effectively means, from what we understand from what he said, is a sort of de facto NATO membership. So not member of NATO, but effectively Article 5-like guarantees, not just from the Europeans, but also from the United States. So the details of that will have to be thrashed out. To what degree the Europeans will be involved? Are there troops on the ground? That sort of question around the coalition of the willing. And of course, the key question of territorial, effective surrender. But again, this would be a sort of de facto NATO guarantee with a sort of de facto giving up of territory potentially from the Ukrainians, though that is not something that they would ever sort of legally acknowledge.
Ollie, thank you very much indeed. Ollie Crook, outside the European Commission, setting the scene for us ahead of this critical meeting, which is going to take place European time this evening at the White House, and we'll continue with the coverage of that as we work our way towards that meeting. It was really interesting. Friday night, I'm looking at the headlines, it didn't seem as if anything came out, other than kind of the fact that nothing had been achieved from the Putin-Trump summit. But over the weekend, it appears that actually things did take place, and that the idea of security guarantees being on the table, I think, is hugely significant. Clearly, Trump has been stung, though, by the criticism that actually he rolled out the red carpet and got very little in return.
Yeah, and I thought it was interesting when we were hearing from sources that were briefed on these White House discussions that Trump is pushing for a trilateral meeting as soon as this Friday between Zelensky and Putin. What is it going to take from these the discussions today in order to set the table for possibly that? Because that is moving at a very quick timeline, possibly too quick for some of these European leaders who really want to get their voice heard today in D.C.
Well, I think they're concerned about the territorial integrity of Ukraine. I think that would certainly be something that we should watch out for later in the comments that they make. I also think that February still looms large in everybody's minds. That meeting that happened in the White House and how badly it went between Zelensky and Trump. I think the European leaders are trying to provide some sort of support to make sure that that doesn't happen. But the security guarantee story, I think, is hugely significant. If that did come out of this meeting, that there is some sort of Article 5-like security guarantee being provided by the Americans and the Europeans, then that is a big step forward in terms of how ultimately this conflict could be settled.
And I thought it was interesting, I read this weekend, that these Article 5-like guarantees were something that's been floated previously by Meloni, by Italy's Meloni back in March, but was something that was completely dismissed, I guess, in the effort to try to get Ukraine into NATO in order to get those kind of security guarantees. This is something that's not necessarily new to the European framework, but something they dismissed quite quickly back in March.
Which is the most significant event of the week? What is the most significant event of this week? Is it going to be these talks taking place in Washington today? Could it be a Zelensky trilateral meeting taking place Friday, or could it be Powell?
Can you imagine on Friday we have Powell's speech and this trilateral meeting between Putin, Zelensky, and President Trump taking place? But yes, for the markets, it's very much the fact that Jackson Hole begins this week. The keynote speech is at 3 p.m. Friday from Fed Chair Powell. And the big question is really, will he or won't he signal that he's ready to reduce interest rates? A way he could do that is by signaling that the labor market is no longer solid, and he believes that there is some way monetary policy has a role in helping the labor market out and dismissing any worries about inflation. In previous history, Jerome Powell has used Jackson Hole to make some pretty big statements. Remember back in 2022, it was the big statement that, expect economic pain from these higher interest rates. We need to keep rates high in order to reduce inflation. And then last year, he really set the tone for the easing cycle to begin. So he has used this platform previously to make some pretty big announcements. It's whether he has enough data in his back pocket come Friday in order to make that
inflation is still a problem.
Well, then, I mean, the big question then goes to the September data, probably all down to the payroll data at the beginning of September as to whether they reduce interest rates in September. But that would be a very hawkish shock to the market. We're pricing in around 85% of that Fed cut come September.
Yeah, the other possibility is that he says very little. There have been speeches at Jackson Hole, many I can remember, where actually expectation going into it was like he's going to make some big policy announcement. And actually it turns out to be quite academic, quite in the weeds in terms of the economics. Like, Powell's not an economist by training, but he's certainly delivered those kinds of speeches in the past. Like, we are building up, we're anticipating that he's going to make this kind of decisive decision on where policy is going. Isn't there a significant risk that he does very little and actually, to your point, waits for the data and just basically says, we're going to wait and see, here's kind of what the academic background of all of this looks like? Because it does seem as if traders are looking for something concrete this week, and I wonder, is that perceived therefore as disappointing, as hawkish?
Well, look, I think if he says nothing and still in some way tries to characterize the labor market as still strong, that would definitely be a hawkish signal to the market. So if he maintains his language from the previous press conference, hawkish across the board. If he changes it slightly, that's just opening up the door to the market to believe that interest rates are coming. Yeah, we'll talk about what else is coming up this week. There's plenty of other indicators that we need to be paying attention to. There's some great guests on this show this morning that we're going to discuss all of this with. MODUPE ADEGBEMBO, Jefferies economist, is going to be joining us. A key conversation coming up with VSEVOLOD CHENTSOV, the Ukrainian ambassador to the EU. We're going to try and get some insight into Ukrainian thinking ahead of this critical meeting in Washington, D.C. a little bit later on today. Max KETTNER, HSBC Chief Multi-Asset Strategist, is going to be joining us on the markets. And Ben Heelan, Bank of America's head of European Industrials Research, is going to be joining us to talk defence stocks. How will European defence stocks trade around these critical meetings? What will security, Article 5-like guarantees mean for European defence spending, Val? Let's set you up for the week ahead. Today, as we just discussed, the Zelensky and European leaders head to D.C. for a meeting with President Trump. On Wednesday, we have UK CPI for what's ahead next for the Bank of England. Thursday, we get flash PMIs and retailer earnings out of the U.S., with Walmart being the key focus before the bell on Thursday. Friday, that Jackson Hole keynote address from Fed Chair Jerome Powell taking place at 3 p.m. So we'll might be chained to our desks for a substantial amount of time on Friday afternoon here in London. Absolutely. I haven't looked at the weather forecast, but that could be a critical factor in my thinking around that. Two key things stand out for me from that, one of which is the retailers. I think it's going to be really interesting to hear the commentary, particularly from Walmart, but the others as well, as to what is happening, because the retail spending data was quite strong, but the UMich data kind of pointed to concerns
from the consumer. So I think that's worth paying attention to.
And you add to that, on Friday, we also got import prices, which came in quite hot. So does that play into the retailer's back pocket as a way for them to pass these prices on to consumers? Because it does show, like in that data on Friday, that importers are paying the tariff rather than exporters.
We'll see what the margin story looks like. The other thing as well is that I'm going to be watching is this UK CPI data. The UK and the US in so many ways seem aligned. Now, it's not an exact overlap, and clearly there are significant differences in the way that the markets are operating. But the UK has hot inflation right now, and it looks like it's going to get hotter. And I'm just wondering, the pound's been on a little bit of a move of late, and I'm wondering, with a hot CPI print this week, could that push it further? How far can the Bank of England go in terms of cutting rates? I think it feels hemmed in at the moment and deeply divided. And I just wonder whether that's an analogue for what potentially we're going to see with the Fed as well.
Deeply divided. And look, the market has frankly really pushed out the next interest rate cut from the Bank of England. We're not expecting it now until February 2026. So maybe that language kind of changes off the back of this CPI print. But most people are reading through the tea leaves. The Bank of England was hawkish a few weeks ago, and they are maintaining rates where they are for a substantial amount of time.
We'll see what that data tells us a little bit later on this week. What else do you need to know this Monday morning? Hundreds of thousands of Israelis took to the streets yesterday to protest against Prime Minister Benjamin Netanyahu's plan to expand operations in the Gaza Strip. Organisers said as many as 500,000 people attended the main rally in Tel Aviv, a massive turnout by Israeli standards. Bloomberg has learned that China's top envoy, Wang Yi, is travelling to New Delhi today in his first trip to the country in over 3 years. The visit is seen as an effort by Beijing to ease tensions with India and comes as President Trump's tariff policy pushes the two countries closer together. Indian Prime Minister Narendra Modi is expected to visit China in August. That will be his first trip there in 7 years. And Spain's Pedro Sanchez is calling for a nationwide pact uniting all levels of government to combat what he's calling an accelerating climate emergency. The move comes as firefighters in Spain, Portugal, Greece and Turkey continue to battle wildfires that have raged for weeks. I wonder if this is something that shows up in the European data. You've got the worst wildfires in 20 years. It's affecting tourist hotspots all the way across southern Europe. It was 45 degrees, I think 44, 45. I think that's 113 or something like that in American terms.
Thanks for the calculation.
Just for the little translation. I did that earlier for you. But I'm just wondering if this starts to show up in some of the data, whether or not it does have an impact in terms of some of the tourist numbers. It has an impact in terms of some of the industrial data as well. Spain in particular is being hit really hard. I think it's the worst in 20 years that we're seeing in terms of the wildfire situation.
Well, hey, flash PMIs out on Thursday. We'll keep an eye on how services are faring across Europe on the back of those wildfires. Well, coming up on the show, the Airbus A320 is set to overtake Boeing 737 as the most delivered commercial airliner in history. We'll bring you the details. Plus, Novo Nordisk shares jump on TradeGate after weight loss drug Wegovy is approved as a liver disease treatment. We'll bring you the details in a bit. Up next, it's Jackson Hole Week, and markets look to Jay Powell's speech for indications on rates and for the future of the Fed. If you have any questions for our guests, please send them to IB plus BBTV Go to join the conversation on set. This is Bloomberg.
43 minutes to the market open this Monday morning. Good morning. There's a lot going on. It's going to be a busy week, despite the fact we are mid-August. In terms of what we're going to be seeing moving markets today, a mixture of geopolitics and anticipation of some interesting data and speeches later on this week. Val, what are we watching?
Hey, the highlight of this week is the world central bankers headed out to the mountains of Wyoming, and Fed Chair Powell due to make his keynote speech at Friday at 3 p.m. The big question is, will he or won't he use this kind of platform to signal the labor market is no longer strong, to perhaps signal that he's ready to reduce rates come September? He has used this speech in the past to jolt markets. Back in 2022, how can you forget? He used this speech to basically prepare consumers and businesses for pain due to higher rates. Last year, he came out hawkish in some way, saying that time has come for policy to adjust. That was his big signal. The Fed is ready to reduce interest rates, and they did that in the following months. Essentially, is he going to change Lynch's tune on the labor market after previously characterizing as solid. That is what the market is going to be watching out for. But the market has had some pretty hawkish signals lately. The hot PPI print on Thursday. Then we had U.S. import prices on Friday rising higher than expected. You combine that with the University of Michigan, the long-term inflation expectations really kicked higher on Friday. That's led to some pain when it comes to the long-end bonds. Those 30-year yields are up 8 basis points in the last 3 sessions. Now, we could get some more intrigue, I guess, from U.S. earnings when it comes to the narrative on tariffs and on inflation. It's a big week for U.S. retailer earnings, the big one being on Walmart on Thursday. Guy.
Going to look forward to what the commentary looks like coming out of Walmart. We're going to watch that very carefully. Let's talk to MODUPE ADEGBEMBO, economist at Jefferies, about what is happening this week and how she's thinking about it. Good morning.
Good morning.
So Jackson Hole, back end of the week, feels like kind of the main event from an economics point of view. But before that, we get some interesting data, particularly out of the UK. The inflation numbers, I think, are going to be fascinating. Do you think Andrew Bailey's going to wait in terms of writing his speech for whatever he's going to say at Jackson Hole until he sees that data? And what do you think that data's going to tell us?
So I think the data is going to be very, very important because this is going to be, well, I expect we're going to see an acceleration overall in inflation. But one of the important components I think Andrew Bailey is going to continue to look at is around the kind of food prices kind of complex. Because we've seen the Bank of England has been a lot more focused on food prices and energy just in general, because even though we've seen other elements of inflation come down, they know how important they are for people and their inflation expectations. And as they tick up, I think the bank is really, really worried around that nexus and that kind of constellation of prices. So I do think there'll be a big focus on that. And I think he will be quite grateful that he's able to kind of deliver his remarks after that data has come through. So it will give him a bit more clarity on kind of the positioning that he would want to send.
What do you think the bank does next? Like, deeply divided, clearly, the MPC. Expectations are being pushed out in terms of when the next cut comes.
Yeah.
What are your views?
So, in my view, I think for September, I never expected kind of any move there. But I do think in November, the Bank of England is likely to lower rates. I think the real reason for that is just we talked about the price kind of complex. And I think that is, of course, very important. But the other side of things is activity and the labour market. And the weakening in the labour market is something that we've seen over a longer kind of time period. Of course, some of the recent data has maybe been a little bit less soft. But I think when you look at the activity side of things, and a lot of this is coming from not necessarily the hard data we're seeing. So, of course, the GDP data that came out last week was stronger than expected. But actually, some of the details within that were still quite weak. So I think when you're looking at the overall drivers of activity, it's not in a positive direction. So I think it signals that the MPC can continue to loosen rates. But it's clear that MPC is going to be divided because a lot of the people who are quite hawkish at the moment, I don't think the data is going to convince them that they should back a cut. But the people who have already continued to back a cut, I think they will continue to see the reasons.
Feels like Bailey's pretty pivotal in all of this.
Yes. Well, in that same tune, you know, another central bank that appears increasingly divided is the Fed. Do you think Powell is going to use Friday's speech and in some way give an acknowledgement that the labor market has weakened? Or do you think, like those at the MPC, he stands more concerned on inflation and not ready to make that kind of signal?
I think coming up to kind of Powell and his comments and remarks, I think it's likely that we will see a change in his tone because I think the data has warranted it. I think one of the things that Powell is going to try really, really hard to do is I don't think he wants to open the door to a bigger than 25 basis point cut in September. I think he's likely to kind of want to just generally say we've seen more data and we think the labour market is weakening, but not want to open the door for people to then kind of increase expectations of a 50 basis point cut. So I do think he has quite a delicate balancing act because he will want to acknowledge the actual change that we have seen in the data.
Yeah,
I think that's
interesting that maybe he wants the pricing where it is in September. Right now it's sitting around 85%, which is pretty decent given we still have another round of inflation, another round of labor market data before the Fed convenes on the 17th. But when it comes to division at the Fed, how do you expect these policymakers who are on the short list for Fed chair to interact at that FOMC meeting in September?
I think it's interesting because I think what we're seeing more is, I guess, a big division that we don't normally see in the Fed. If we look at other central banks, particularly I'm thinking about the Bank of England, you often see these divisions. You often see these people with different opinions. But I do think a lot of the people who potentially are on the potential list to be the next Fed chair have already maybe acknowledge some of the weakness in the labour market data sooner than others, so some of the main kind of contenders there. And I do think there's a chance that we could see a lot more people kind of vote for a 25 basis point cut. And I don't think that's necessarily just because they're on the list, but I also think it is because we are seeing that data. So I think it's a mixture. I think some of it might potentially be the way that they want to be positioned, but also a lot of it is related to the data. And I think it's undeniable that the data has weakened on the US front on the labour market.
Can I turn to the geopolitics and try and figure out kind of what it can mean economically for Europe? If there's a peace deal in Ukraine, how are you thinking about what that would mean in terms of the European growth trajectory? Would it be a positive? Would it be a negative? Just kind of broad brush.
Yeah.
What would it look like?
Well, I think at the moment, of course, kind of what form that peace takes is really uncertain. But our views are that if we were to see kind of an end in fighting and a peace deal in Ukraine, that would be very, very positive for Europe from a growth perspective.
Just how would that work specifically? Is that a kind of rebuilding story, or is it just a kind of there's a peace dividend story, or how do I think about it?
I think it's a mixture. So I think when you think about rebuilding, that is one thing that is extremely important. So if you think about not only all of the raw materials needed, but all of the kind of other services around the kind of rebuilding, that is important. But I do think a peace dividend would also be extremely important, especially for Europe. There's been a lot of uncertainty over Europe's kind of trajectory, growth, but to have a more positive kind of outlook for Ukraine would, I think, have big spillovers more widely than just Ukraine. I think it would have a big spillover for European countries. I also think that they would have a lot kind of more, if we were to see a peace deal, there could potentially be kind of more strength that's projected from Europe, and that would be a positive, I think, on a global stage to be able to be in that sort of position that they haven't been.
In terms of this peace dividend or this possible boost to European equities, surely the main transmission mechanism is through lower energy prices. Do you agree with that sentiment?
So I think lower energy prices are extremely important, and I think that we've seen the activity in Europe, particularly in Germany, has been weighed by increased energy prices. So I do think that is extremely important. But I think we could see it in other areas as well, because I do think that increased confidence as well is something that could boost wider sectors than just kind of through the energy impacts. But I agree in the sense that I think one of the big deltas that a lot of people are looking at and looking towards will be on the energy side.
I guess the one possible negative could be that this investment spending isn't spent as quickly because of this peace on the eastern border. You think that's a negative risk for the European economy?
So I do think there is definitely a risk there, because I think when we're talking about peace, as I said, we just don't know exactly what form the agreement will take and what sort of security guarantees, etc., will be there. And so I do think there is a risk, of course, if you have a situation where companies are more worried about the kind of the fragility of the peace process or of the peace agreement, then it could also be a negative to investment. And it could mean that maybe people hold out for kind of repatriating funds or kind of bringing investment into the area, which wouldn't be a positive.
MODUPE, great to see you. Thanks for stopping by to see us. We really appreciate it. MODUPE, ADEGBEMBO, joining us from Jefferies. So trying to fold in the main stories of the morning, trying to think about what it would mean for Europe, I think is a really interesting exercise to go through. We're also going to be talking about defence a little bit later on. If Europe has to provide security guarantees, what does that do in terms of kind of open-ended almost commitments on defence spending and Europe's commitments to rearming? How does that sit alongside with a reconstruction? Where do all these various pots of money come from? Yeah. I think will be a really interesting exercise for Europe to have to go through as well, because it looks like the US is more reticent on funding some of this stuff. The guarantees may be there, but it may be less tangible effects, like sort of intelligence assistance and maybe overflight and that kind of thing. Europe may have to come up with a lot of money here. Yeah, well, it's interesting we end the discussion on geopolitics. It does look like there's been more of a negative sentiment shift in markets just in the last 20 minutes as London traders sit down. S&P 500 futures are in the red. Euro Stoxx 50 futures are in the red. And take a look at oil prices. Brent crude is up nearly 0.5% now. So it does seem to be maybe that early optimism from the Asia session is declining as Europe. Looks like I think it's going to be a really tough meeting. I think Europe's got navigating this is going to be really difficult. And I think the fact that Zelensky's got friends with him this time may make a difference here. But we could still see an outcome like we saw last time in February. Trump's certainly tweeting overnight. He's not a happy man at the moment. Posting, I should say. The Ukrainian ambassador is going to answer some of these questions for us. He's the ambassador to the EU. He's going to be joining us next. This is Bloomberg. 30 minutes to go till the start of equity trading here in Europe. Futures rolling over a little bit right now. Certainly that's been the narrative over the last few minutes. Big day coming up from a geopolitical point of view, from Europe's perspective. How does that get represented in equity markets? We're going to count you down to the open and then give some analysis around that. Is it as positive as it looked first thing? Well, certainly the indications are that that's beginning to fade.
Let's check out how fixed income is faring. Friday was quite a pummeling day when it comes to long-end bonds here in Europe. You had German and French 30-year yields jumping around 10 basis points, hitting a 14-year high. We're somewhat reversing that today following treasuries. Yields are slightly lower by less than 1 basis point.
OK, so let's fold in the geopolitics in a little bit more detail. European leaders will join Volodymyr Zelenskiy at his high-stakes meeting with Donald Trump in Washington later today. The Ukrainian leader is facing growing pressure from the United States to agree to a quick peace deal with Russia. The US Special Envoy Steve Witkoff says Russia agreed for US and EU nations to give Ukraine, quote, Article 5-like protection.
We got to an agreement that the United States and other European nations could effectively offer Article 5-like language to cover a security guarantee.
Let's talk about this some more. Our reporter Oliver Crook joins us from Brussels. Oliver, what are expectations like going into this meeting? What do you think the base case in terms of the outcome could be?
Yeah, so, Guy, I mean, listen, when we talk about the meeting that we saw between President Trump and Vladimir Putin on Friday, there was a lot of questions of what concretely actually came out of it and what was different on Monday than it was on Friday. I think that soundbite that you just played from Steve Witkoff, if in fact that is the case, that the United States is now willing explicitly to put forward security guarantees to the tune of sort of Article 5, basically membership to NATO, though not calling it membership to NATO, would be the most significant development. What I think is interesting, though, is that people are talking about this as if that was a fruit of a conversation between Russia and the United States. The United States could very easily have provided those kinds of guarantees, which is what the Europeans have been calling for months now, without the consent of Russia. And in fact, the Article 5 security guarantees that do exist for NATO exist not with the consent of Russia, but to the objection of Russia. So sort of an odd dynamic going into this, that if any concession has been made, it's really been from the United States side rather than the Russian side. The other issue that will be discussed, in addition to the security guarantees and what sort of part the Europeans would play in that kind of security architecture. And remember, Guy, that's not a done deal. We've talked to the Germans in the past few months about the potential for deploying German troops as peacekeeping forces within Ukraine. That is not a done deal. That is a very difficult domestic message to put forward by Friedrich Merz, particularly when he's being sort of badgered by the far right, which is now the biggest political party within Germany. But the other side is, of course, the territorial boundaries within Ukraine. The Ukrainians have said emphatically they will not legally recognize a Russian occupation of their territory. Will there be a sort of de facto recognition that the Russians occupy a large portion of the Donbass going forward, for in return a de facto, basically not NATO membership, but Article 5 guarantee? That is going to be the principal conversation and debate today in the Oval Office, which will be joined not just by Volodymyr Zelenskiy, but of course all of the leaders from Europe, many of them Merz, Macron, Rutte, and von der Leyen herself.
Ollie, what needs to happen today to set the groundwork for perhaps a trilateral meeting that sources have been saying that Trump wants to see as soon as this Friday in between Zelensky, Putin, and Donald Trump?
I think as unpredictable as Trump has been throughout this entire process, which has made it very difficult for the Europeans who tried to get a sort of voice and a seat at the table throughout this, the one thing is clear when it comes to Trump, particularly on the issue of Ukraine, is that no one wants to be appearing to be the obstacle to peace, the obstacle to a deal for Donald Trump. Zelensky learned that the hard way. The European leaders have learned that as well. And so basically they're trying to do everything in their power to set the table, to not give up too much, but to say basically at no point are we obstacles to peace. The trilateral meeting is something that Zelensky has been spoken in favor of. It is really Putin that is the question of whether or not he would join such a meeting. So I think that, again, what you're going to get from the European leaders and Zelensky is giving as much as they can to the American president to say, listen, we are willing to do all of these things, step in all this line. Here are sort of our red lines, but we're on board with your program, in order to say that basically now it's up to Vladimir Putin. And if he is the stumbling block, that is what the Europeans will hope will be displayed to President Trump, at which point he would theoretically put forward some of these sanctions, secondary sanctions on those who still buy Russian oil. That being said, we've heard basically nothing about that after the meeting with Putin and Trump, so that has sort of dissipated. But again, that is still sort of in the background of the conversation, whether or not the U.S. would be willing to ratchet up those sanctions if Putin does not come to the table.
Oliver Crook, outside the European Commission in Brussels, thank you very much indeed. Joining us now to discuss this further is the Ukrainian ambassador to the EU, VSEVOLOD CHENTSOV. Ambassador, good morning. Thank you very much indeed for your time. What should our expectations be about the meeting that is going to take place in Washington, D.C. a little later on today be? How high should they be? How low should they be? What do you think Volodymyr Zelenskiy can achieve today?
Well, Vladimir Zelensky was in Brussels yesterday. He met Ursula von der Leyen. Also, they had two very important coordinating meetings, including with leaders who joined them today in Washington. And there was a great sense of unity. And it's rightly so, because it's about security not only of Ukraine and in Europe. What about expectations? We need to use this momentum because President Trump invested a lot of political capital to get it done. There is a readiness, at least readiness on the Russian side to talk. And now we need to use this momentum, but we have to talk from the position of force. And we have this possibility. So the stakes are high. The expectations are high.
Yep. Expectations are high. OK, so we're managing expectations up here in terms of how we should be thinking about the meeting. Steve Witkoff over the weekend talked about security guarantees. Article 5 like security guarantees. How would that work? What would that look like from a European perspective? And is that something that would allow Ukraine maybe to accept a peace deal along the lines of what is being talked about, i.e. some territorial loss to Russia in return for security guarantees? Is that what is being set out here?
About security guarantees. First of all, the best security guarantee for us is a strong Ukrainian army. And our army is strong, but we need to take additional efforts to make it even more powerful and being able to defend not only Ukraine, but also to become a contribution to the European security in the future. What we need for that is a continuation of the US support, and we understand that US is ready to continue to provide Ukraine with weapons, and there is arrangement with European partners how to financially arrange it. And also we need to use what is possible, I mean financially and from the Commission program standpoint, SAFE program for instance, to make Ukraine a full participant of those new initiatives, to use our experience, to use our military defense base, and to make sure that we are able in the medium and long term to defend ourselves. This is the most important point. But definitely we also count on European support, and there were different ideas, including boots on the ground. We also need definitely US backup, and especially the last point will be discussed today. What US could offer to underpin this idea to defend Ukraine?
Ambassador, I want to push you on that question again. What, in your opinion, is achieving U.S. security guarantees worth it if Ukraine has to concede some territory?
Look, I can only repeat what President Zelensky said yesterday here in Brussels. We are not going to acknowledge legally any loss of territory. If we are going to have any discussion on the territory, that should be a discussion with Ukraine, eventually in trilateral format. But we cannot prejudge the results of this discussion, neither today nor in a trilateral format later.
And in your mind, how are these discussions going to go today? We know that U.S. President Trump is meeting with Zelensky one-on-one before then including the wider European audience. Do you think that Europe and Ukraine are going to be successful in pushing for these demands today?
I think it is important also to brief President Trump, and I'm sure President Zelensky will do so, what is the real situation on the ground, what is actually possible for Ukraine to accept, and definitely it's important that European leaders today supporting President Zelensky, and it's also a great opportunity to show that Europe is united, Europe is helping Ukraine, and Europe is able, together with the United States, to speak to Russia from the position of force. And we have to remember that this is a reality. Russia is a very simple and small economy comparing to US, comparing to Europe. And it is possible to exert serious pressure on Russia. And Russia understands only language of force.
Ambassador, should that include secondary sanctions? Is that something that you think the Europeans are being slow in pursuing? Secondary sanctions on countries like India and also China?
So European Union started to work on 19 package, and it's very important. And definitely there is a coordination within the G7 format how to continue this sanction pressure on Russia, including secondary sanctions. And I think you remember in the previous 18 sanction package already few companies from the third countries, they're being sanctioned, and the first time probably the Indian companies, they felt the pressure, and it's much more difficult now to buy the Russian oil, which is brought to the markets using the shadow fleet. So it's happening now, and we need to build up this pressure to make sure Russia understands the consequences if they are not cooperative, and choose negotiated solution over the war solution.
Yep. Ambassador, what was the Ukrainian read of the meeting that took place in Alaska on Friday? There seemed to be a withdrawal of this idea that there should be a ceasefire. What is your reaction to that? And is that something that will continue to be pushed for today by the Ukrainians, that we do see a ceasefire before talks can continue?
That's for sure. And it's important to stop the killing right now. And definitely President Zelensky will push to get back this agenda item to negotiating table, both with President Trump, but also during eventual trilateral meeting. Yes, there were expectations in Ukraine that meeting in Alaska would bring the agreement on ceasefire or get us closer to this agreement. It didn't happen, and definitely we need to try to get back to this discussion.
Ambassador, we really appreciate your time. Thank you very much indeed. Ambassador CHENTSOV, Ukraine's ambassador to the European Union.
Well, coming up on the show, Novo Nordisk's blockbuster weight loss drug, Wegovy, gets U.S. approval for treating a serious form of liver disease. We'll talk about that and your other stocks to watch next. This is Bloomberg.
Monday the 18th, 12 minutes to go until the start of cash equity trading here in Europe. We're turning a little bit more cautious as we start the week, judging by what we can see in European futures. There's a long way to go until Friday. We've got some geopolitics to price in this morning. And there's a lot going on as well. Let's fold in the AI trade to all of this as well. We're joined now by our Markets Live executive editor, Mark Cudmore. Mark, the main event appears to be not maybe the geopolitics, but maybe actually what we get from Powell Friday. Walk us through the market reaction if Powell is hawkish or dovish.
So I think that Jackson Hole does actually matter this year. It's frequently anticlimactic, and I'm not saying it's going to be a big hyped-up event, but it will be a trade next week. And the reason it appeals to me is I think that there's one trade that works no matter what the outcome. That's always a dangerous assumption to have, but let me walk you through the logic. I think that long-end US bonds sell off, or at least struggle to rally no matter what, and most likely weaken no matter what happens. So first of all, the situation going to Jackson Hole is we've got aggressive cuts priced, despite the fact that inflation is well above target and rising, despite the fact that retail sales are still strong, consumers still spending, despite the fact that US stocks are at the highs, despite the fact that unemployment is not going up. Now, we've got a supply side problem on the labour market, which is why the clearly cooling labour market is not seeing a higher unemployment rate. But you don't cut rates to ease the supply problem. And also, orthodox central banking says that if you've got an inflation problem, inflation above target and rising, then you don't cut prematurely. You don't do an insurance cut. You wait till the economy clearly slows down. You maybe get a small recession, but that is a better response than cutting preemptively and stirring up inflation to risking cutting too early. So therefore, we've got too many cuts priced into the curve because of the administration pressure. So there are two outcomes. One is Powell, suddenly validates all this pressure. And that means it'll seem like, okay, the Fed is folding to the administration pressure, and that means an aggressive steepening of the curve. So you'll get probably a twist steepening. You'll get the front end lower, and you'll get long end yields higher. The flip side is Powell reiterates that, hey, look, these rate cut pricing is bonkers. There's nothing to say that rates are restrictive just yet, and that means you actually get a shift higher in the yield curve, and long end yields will be under pressure yet again. And that will just double down Trump pressure, which will again increase the dynamic of steepening. So I think long-end yields are skewed to go higher no matter what happens out of Jackson Hole.
I guess, Mark, the other option could be is that he tries to sound as market neutral as possible. I mean, do you think that Jay Powell likes the September Fed pricing as it is, an 85% chance of that cut, or does he want to pare that back before this next round of data?
That's a great question. I actually don't think he minds the pricing right now. Remember, again, there's a not unreasonable chance the Fed has to cut super aggressively. It is clear the economy is slowing. It's clear the labor market's slowing. It's just that in this situation, with inflation a much bigger problem, it is not the time when the Fed should cut early. So they need to make sure that the economy is going off the cliff and then cut really aggressively. This is why in this scenario of high inflation, you don't get a cycle of rate cuts. You get no rate cuts, and then you're going to get 150 basis points in the space of a couple of meetings when we realize that we really need to cut rates really aggressively. But until then, there won't be any rate cuts. Right now, he shouldn't push back on the cuts that are priced in the market.
Mark, okay, so let's stick with the idea that potentially there is a hawkish outcome here. How vulnerable is the Mag 7 to that, given the long duration nature of that asset?
Yeah, I think Mag 7 AI is acutely vulnerable right now. And I need to put the context here that while I have long kind of thought that US stocks are overvalued relative to the rest of the world, I have not been someone who's been specifically negative on AI. In fact, I'm normally quite constructive on AI. I've just thought the valuation premium in the US is wrong. With that context, I am now finally, after a couple of years, worried about the AI theme specifically. And that's because the incredible amount of capex that we've seen gone in. Sam Altman just said it was crazy while saying he expects to spend trillions. And he even said it's overinvestment out there. And that, it's the OpenAI CEO at the center of this. So because of all that capex, they are much higher duration assets than they were before. So they're much more vulnerable to higher interest rates. So I think that's one dynamic. Jackson Hole threatens them in the coming couple of weeks. Also, we're soon set to get the tariffs on chips, which might be a risk for the sector. We're also seeing Trump getting encouraged by the fact that so far it doesn't seem like there'll be a legal challenge to the NVIDIA AMD revenue share that he's getting. So he said last week, the White House said that they might expand it to other companies, which is a direct hit to profit margins. So I think there's several dynamics that are coming up at once against AI that makes them vulnerable. Now, we do have NVIDIA earnings at the end of the month. They are likely to be very positive. The evidence from this earnings season, which we know, is that the AI boom has been going strong. But I think that's backward looking. I think that bears will want to wait till that gets out of the way. So I think it's probably after that I think AI is acutely vulnerable. But we really now I'm getting worried for the next month for that AI sector. And that means all global markets.
All right, Mark Cudmore worried about the AI mania trade. That was Bloomberg Markets Live executive editor Mark Cudmore. And remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLIV Go on your terminal. Now let's get the stocks to the watch with Chloe Melly. Chloe.
Good morning, Valerie. Let's start with some good news for Novo Nordisk this morning. So its blockbuster drug Wegovy got approved for a form of liver disease in the US. That means that Novo is accessing that US market for that disease before its biggest rival, Eli Lilly. So that should provide a bit of a boost after what we've seen has been quite a tough year for Novo Nordisk. The shares are down almost 50% year to date. So it needs that bit of a boost, and that could provide that this morning. Moving on to a new upgrade from Morgan Stanley for AutoStore. So AutoStore makes robots for warehouses, and Morgan Stanley said that this automation cycle should begin to recover. So we could see a lift in the shares on the back of that. The shares have been struggling a little bit. We saw a lot of weakness at the beginning of the year around April, and they are down 18%. But we've seen here a bit of an inflection point over the last couple of weeks, and that should probably continue on the back of that Morgan Stanley upgrade. And then finally, let's end on another rating, this time for UK defence company Babcock. So it has been upgraded at RBC, and it has already been outperforming peers Melrose Industries and Kinetic. And RBC said that the Babcock's really strong relationship with the Ministry of Defence in the UK and its strong management team should kind of lift those prospects for future growth going forward.
Chloe, thank you very much indeed. Plenty to think about this Monday morning. Keep an eye on UK housing stocks as well. We've seen some disappointing data overnight on the housing front out of the UK. That's going to be quite interesting. This Wegovy story is fascinating. They've got there before Eli Lilly. 15 million adults in America have a condition which could now be treatable with Wegovy, which it's a huge market.
Yeah, and they need bigger markets because their one drug is this weight loss drug.
Yep.
So more markets for them, better the outcome.
It's been a tough ride recently, though. Futures turning a little bit softer recently over the last hour or so. The European market open is next. 5 minutes to go. This is Bloomberg. Monday the 18th. Good morning, folks. Look, the news out of Alaska came late Friday, so it didn't really get priced into the European session or to a certain extent the US session as well. A little bit of disappointment maybe coming out of that meeting, but we've got another meeting today to think about. European futures, though, a little soft going into today. There's not a lot of corporate news out there to fold into the narrative, so it feels like it's kind of top-down rather than a bottom-up narrative that maybe we're dealing with right now. Euro Stoxx 50 futures just rolling over a touch. We've seen it with US futures as well. FTSE futures are still a little bit positive. See how the house builders react today. That's going to be an interesting story after the kind of soft data that we saw over the weekend. But we've got CPI coming up this week. DAX futures down by 0.1%. So a cautious start into what feels like a busy week with a lot of geopolitics at the front end and a lot of economics at the back end, Val.
Well, let's take a look at some stocks that are on our radar ahead of the open. The big one being Novo Nordisk. They got FDA approval on Friday for Wegovy to be treated for liver disease in the U.S. We expect some big upside based on the pre-market moves for pharma for Novo Nordisk. Also an eye on defense stocks. As Guy mentioned, the geopolitics is really front and center today. Thirdly, I want to keep an eye on this Swiss chipmaker U-Blocks. Advent International has offered to buy this small Swiss chipmaker at a cash offer below their closing price on Friday. Guy?
Small Swiss chipmaker. That's hard to say fast. Okay, let's talk about this market. Final moments before we start trading here in Europe. We are anticipating a soft-ish start, but not really anything that feels very conclusive. You've got a lot to think about this week in terms of the narrative that we are going to be watching. You've got Powell on Friday. You've got the big US retailers reporting numbers as well. You've got CPI out of the UK and geopolitics right at the beginning of the week. So how does that all get priced in? Let's find out. It is time for the opening trade. This is the picture. The FTSE 100 expected to climb maybe 0.2%, but flashish at the get-go first thing this morning. Volumes, I would anticipate, are still going to be likely light this week. They certainly were last week, mid-August. You've got to remember that. That's where we are at the moment. Stock 600 really doing not very much. We're slightly more positive maybe than anticipated. We're waiting for the CAC to open, the DAX and the SMI all to open this morning. The IBEX is absolutely flat as a pancake. Nothing to see there. We'll wait for the DAX and the CAC to open. It's going to be interesting to see what we see with Novo Nordisk as well as it comes out of the gate first thing thing this morning. Week of late. There you go. The CAC 40 doing absolutely nothing really this morning, up by 0.1%, but holding in there. I think maybe that should be taken as a positive first thing. But it looks like the markets are looking for a catalyst. Is it geopolitics? Is it economics? Or does the corporate news continue to drive what we're seeing here, Val?
It looks like we got a mix of both here in the first minutes of the opening trade. When it comes to sectors, healthcare is at the top of the basket. Guy, that is all down to Novo Nordisk, opening up over 4% higher so far in trade. Very interesting thing going on here with defense stocks. We are seeing them in the green, the likes of Rheinmetall up over 1%, nearly 1.5%. And on the flip side, Raiffeisen Bank, this is a bank that was known as the reconstruction trade. That's down 5%. So it does seem to be like there is, I guess, some negativity, Guy, on perhaps a peace deal, given the move higher in defense stocks and lower into banks that are leveraged to reconstruction. When it comes to the sectors, though, we do have some in the red, one of those being energy and auto parts, basic insurance, and banks.
So Raiffeisen has hit a series of 52-week highs recently. The banks in Europe generally have been really positive. It's certainly one of the names that has sort of stood out. Every time I look at a 52-week high list, and there are many on that list, it has certainly stood out, maybe towards the top end of that. So maybe that trade being unwound a little bit this morning. The defence story is interesting. In some ways, you can argue that there could be a defence dividend that comes out of this, a peace dividend that comes out of any deal on Ukraine. But it looks like Europe is going to be providing security guarantees. That means more kits, more equipment being required for that. That would only seem to add into the narrative that Europe is going to need to continue to spend quite significantly. But Novo is the real standout story to me this morning. It's had a really tough ride recently. Many Americans, it seems, are exposed to MASH, which I'm not going to give you the full title of, but it's a liver disease.
6%, you told me earlier,
6% of Americans
have liver disease.
So that's a huge number of people that are going to be able to be treated with Wegovy. And I think the significant thing here is that they got to market first as well, before Eli Lilly. Now, last time round, when it came to the weight loss narrative, that initially helped, but it changed really quickly as competition came to the market and Lilly came to the market. So how long does this boost last for? I think it's probably open to interpretation.
Yeah, it's interesting. We're seeing some of the automakers, some of the laggards when it comes to the Eurostoxx 50, Mercedes in the red. You thought maybe that they would perform better today given the outperformance in Chinese stocks on the back of some stimulus hopes, that maybe that could help some European industrials as well. Vestas opening up 9% higher as well. This comes after their decent earnings last week, and they're clearly standing out compared to Ørsted, who had to issue a rights offering to raise cash, and the stock moved 30% lower last week.
I think Ørsted's got ex-dividend today, which is also worth bearing in mind. We both raised an eyebrow at that a little bit earlier on today.
Why are they paying a dividend when they need cash?
Yeah, that does seem to be a little bit odd. Let's talk about these markets more broadly, figure out what is happening here. Max KETTNER, Chief Multi-Asset Strategist at HSBC, joining us around the table. Still bullish?
Still bullish. That's
anything
done.
Okay, we
Monday,
can go. You can
8 a.m.
go.
Thank you
Back
very
on your
much.
bike. Off you go. Anything denting that? Any cause for concern?
No, not really.
No?
I think, if anything, when we look at the last, I would say, month and a half, what it's shown, I think, is how much we should really focus at the data, at the numbers, and not at the sort of nitty-gritty and, politics here, politics there. And, like 2 months ago, we were all talking about geopolitics, and there was the Japanese bond sell-off, and then it was, now obviously Fed chair getting replaced or not, and, you're sort of over-interpreting every single tweet. And at the end of the day, like, well, actually, you know what, the dollar is down 10%, the Mag 7 make, like, a bit more than 50% of its revenues from overseas, so the weaker dollar helps. Thank you very much. We got a bit more earnings boost, really good earnings season. That's what I'm buying, end of story. Right? It's that simple.
Max, can I ask, the move by the U.S. government, or the reported move by the U.S. government to want to invest in Intel, does that make you more or less bullish AI?
I couldn't care less. Is basically my answer. No, honestly, like, no. I don't mean to be derogatory, but it's one of these things. I'm like, yeah, sure. Like maybe they'll pay a bit extra. But Intel as a whole, of course, is also not. I don't think is in terms of market cap big enough, right, to really move the needle. That's number one. Number two, it's probably one of these things that I think bearish people will take as, oh my God, the government and the sovereign is investing into a company, and isn't that eroding trust in the economic system of the US? Is it really? I mean, these are the sorts of things. These are the sorts of discussions. Now, frankly, I at least have been having throughout my career every sort of 6-9 months. right? I remember every sort of half year, maybe it's only once a year, where you start to see, oh, the Fed's been wrong about this and that. Remember just the last 5 years, they've killed transitory, right? Transitory, they've been wrong, and it was like, oh, they've been so wrong, its credibility is damaged so big time. Then end of 23, beginning of 24, they've been late in hiking, now they're late in cutting. Oh, that's going to damage the reputation and the credibility of the Fed. Now this. It's stuff that people bring up.
So you don't care about the Fed? Like Val's having kind of small kind of heart
No, but Intel is one of these. No, but it's also one of these things where I'm like, ready?
The Fed is the Fed.
You could definitely argue that the U.S. government investing directly, having this revenue sharing agreement with NVIDIA, could make you and makes me more bullish the AI theme. I mean, it's almost better than having the CHIPS Act than just handing out cash to be invested in these businesses' success. Do you agree with that?
Yeah, that one. Yeah, I think that if you, but it's only about the opportunity cost, right? Or what would be the alternative? The alternative would have been, probably pay around 50 billion tariffs over the years, right? And rather than doing that, you're just paying 3.5. There's like
we're still waiting for the 232 sectoral tariffs on chips. Yes, he did float this 100% tariff with a lot of exemptions. We still have not gotten the the on paper report, and that for pharma as well. Are you discounting that as well as a risk on the horizon?
No, I am pretty much discounting it. I'm probably too much in summer mode now. I get it, but to me, I think tariffs.
The winter coat.
That's. I guess, tariffs for me, overall, they've become a little bit like 5 years ago with COVID. Remember, COVID was the same thing, right? It was like first infection wave, first lockdown, sell everything, ask questions later. By the second time, we kind of already knew, okay, you know what, this quarter is probably going to be a write-off, so there's going to be this dip now, but you need to buy the dip because we know the quarter afterwards is actually going to be the catch-up. And by the third time, there wasn't even a dip to buy because it was the muscle memory kicking in and really saying, actually, you know what, why am I even selling? Because I know if I average it out over 2 quarters, things are going to be fine. And this is the same thing where you're like, well, you know what? Yeah, fine, there might be some tariff, but then they'll find some agreement over the next week or month or whatever, and it's going to go away in some shape or form. Fine, move on.
So everything hangs on Mag 7 earnings?
I don't think everything.
Sounds like
right?
it.
I don't know. You know what? I don't think everything, particularly not right now, because what actually is amazing to me is we're talking about Fed chair, we're talking about geopolitics, all these sorts of things.
So they do matter?
No.
Okay,
what I'm saying is, we talk about all this stuff. I think what we're missing is when you look at the high frequency data out of the US, credit card data, debit card data, high frequency consumer spending, right? Those type of things, even weekly aggregates. I think the Dallas Fed has a weekly activity proxy, so like electricity consumption and labor market data, same store retail sales, all this sort of stuff. Pretty much everything tells you that we had front-loading March, April. May, June was a bit of a temporary dip. Yep. And now since July, things are actually picking up. And you see that pretty much across the board, that actually over the last month and a half, almost 2 months, things are improving. They're getting better, which actually means now going forward, isn't now the time where you're like, you know what, maybe NVIDIA and the earnings will still be great. But after that, isn't the next trade to play the broadening theme again? Not all the way down into the Russell.
We're back to that. Okay, we're back to broadening.
We're back to broadening because I do think, again, I don't know why people are missing it because you are seeing it.
That sounds inflationary to me, doesn't it?
Well, the small cap trade last week lasted like 2 days. Yeah. And the Russell 2000 gave it all back.
No, that's the thing. I'd much rather stick to the equal weighted S&P, to be honest, than to the Russell because the Russell issue, of course, is if we do get broadening, if we do get an improvement in the data and people start to realize it, what happens, you get yields up, and obviously with the floating rate debt exposure of the Russell, that's not great for the Russell. You want to stick to the equal-weighted S&P. You still want to stick to quality, but go the equal-weighted S&P. Don't go down the Russell. Don't go down that rabbit hole, really.
So one argument, maybe to temper the bullishness, is that
wow, I can't believe you just said that.
I argue both sides around the table
Try me.
Is that the immigration policy, the lack of immigration, border crossings going to zero, is not only going to have a deflationary effect, but is also going to have a negative impact on GDP growth. Do you believe what the market is discounting the impact of a massive immigration policy shift? Because, you can definitely frame under Biden, the immigration surged, helped surge along inflation. It helped boost GDP growth as well. Now we're seeing the reverse of that. Are we discounting how much of a negative effect it can have?
Yes, we are, and I think so far correctly, because bear in mind the unemployment rate, U3 in the US, is at 4.25. I think once we're going towards 410, below 410, then I'm with you. Because what I am concerned about is when I look at you guys, when I look at the Bloomberg terminal and I look at the consensus and the consensus page for the unemployment rate, there's pretty much no one that sees the unemployment rate falling. Everyone's kind of like, yeah, you know what?
Isn't that a good labour market?
Isn't
that a good labour market? Why does Powell need to cut?
Well, that's a good...
Yeah, so why do you need to cut if you've got a good labour market?
But the point is, guys, that you start to see the unemployment rate dropping, you start to see a retightening of the labour market, but for the wrong reasons. You're not seeing it,
It's a supply problem, not
Exactly, it's a supply problem. It's not like we had in 2021, 2022 in particular, or 2023 as well, where, you have this immigration surge, you have people coming in and a positive demographic catalyst, right? A tailwind.
Okay.
Whereas what you're seeing now is a negative catalyst. But I do think it's slightly too early to play that. I think that is, to me, it's the biggest risk to look out for.
I think this is something we're likely to hear from Powell on Friday, right? The theme of Jackson Hole is the labor market. The labor market going through change. You don't think he's going to harp on immigration as something that could be a negative risk on the horizon?
I do think that there is really a bit of a risk that maybe front-end pricing is getting a little bit disappointed. Now, you look at the front end, look at October and December cumulatively, we've got, I think, 36 basis points priced in for those two meetings. That's too much. Even if you're saying, yeah, but they're still going to cut in December, then there's still a good 10 basis points too much in the price. So particularly the very front-end pricing really looks a little bit too rich, I think.
For those of you who don't know, Max is from Bavaria, so we should probably ask him some European questions as well, just to kind of get a take.
Some Bavarian questions?
Well, not specifically, but like kind of European, to go with the jacket.
Yeah, exactly.
Do you just ignore Europe? Why do I want to buy Europe right now? Is there an argument for buying Europe?
That's a really good question. I mean, we've just closed the European equity overweight last week. Yep. So we were overweight US, Eurozone, and EM, and we've just closed it last week. Particularly, after the run up with the banks again, it's kind of tough to see upside from here because obviously, yes, you
upside or outperformance.
Outperformance. I think I'm just neutral.
Right.
I don't think it's going to be as bad as, oh my God, they're going to go down 5-10%. No, but outperformance with SSES really hard to come by because yes.
Currency adjust that for me. Is that just put a currency overlay? Do you think the euro is going to get weaker or stronger?
No, I think the euro probably roughly staying where it is, or like slightly higher. Yeah, fine. But nothing crazy like 125, 130. I think for that, people are too much ignoring at the moment how much of a disinflationary impulse the Eurozone is getting, right? Both in terms of growth and in terms of inflation. So I think pushing towards a 125, 130, then it would be even worse. I think then I would be actually underweight the Eurozone. But what you are seeing in the Q2 reporting season, just overlay earnings beat rates, S&P versus earnings beat rates in the Euro stocks, or you are clearly seeing, very clearly seeing, the dampening effect from the stronger euro on some of the exporters in the Eurozone. And you're very clearly seeing that even in a fairly closed equity market like the S&P, it's only 40% foreign revenue exposure, but it's obviously top heavy, right? The top ones really make much more from overseas, but you're really starting to see how much they're benefiting. I mean, we just had the highest earnings beat rate since 2021. We had the biggest earnings season, really, in 4 years since COVID. It's massive. So that really tells you, European outperformance, hard to come by. Is it going to be really, really bad? No, because you've got the defense story, you've got the fiscal stimulus story. That can carry you another 6 months. Now I'm going to be my German self and be a bit more bearish. But I do think, once we go towards the turn of the year and towards the end of this year and maybe beginning of this year, of next year, we're probably going to start to see some disappointment around implementation. I think people are massively overestimating the fiscal stimulus in Germany. It's not stimulus, right? It's not fiscal stimulus. It's capacity to spend. Doesn't mean that they're spending it. Doesn't mean that they're rushing out the gate and saying, we're going to spend 50 billion.
They are still German, after all.
We look at 50 billion, we're like, we should save that. So it's, I mean, I was just in Germany a month ago, and it is amazing. Some of these, like even on small scale, I can tell you a story. In my hometown, we're just building a third windmill, and they've been planning it for 10 years. So it's like, I think particularly American and overseas investors don't realize how cumbersome the regulation is. You look at Germany, public infrastructure projects, 85% is admin, regulation and lawsuits. 85% of the time.
Yep.
We
know how to do those things in Europe. We've got that cracked.
We got that very. But that's the stuff where I'm like, that's not going to change.
Max, great to see you.
Thank you.
Thanks very much indeed for coming to see us. Max KETTNER. How far did you ride this weekend?
130k.
On a push bike.
On a cycle. On a cycle.
On a
Not
bicycle.
a motorcycle.
On a bicycle, yeah. I'm amazed at the energy this morning, first thing this morning. Max KETTNER, Chief Multi-Asset Strategist, joining us from HSBC. Core 6 looks like this morning. This is the picture we find ourselves with across Europe. We've replaced Rheinmetall back with Ferrari. Maybe that was a mistake this morning. Defence stocks front and centre. We may make a permanent change on that picture. Anyway, so that's what the Core 6 looks like. Let's talk about some of the individual names. Chloe Mellis here with the details.
Good morning. So as expected, Novo Nordisk is doing quite well this morning. After a series of setbacks and shares really down year to date, it is finally getting a boost from the approval for Wegovy in the US for liver disease, which means that it's now accessing that market before its biggest rival, Eli Lilly. So it is sending the shares up 3.5% this morning for Novo. Moving on to defense. The defense sector is also trading higher this morning. Rheinmetall, BAE, Babcock as well are all up. This is ahead of the talks between Zelensky and Trump that are going to be happening, and the uncertainty there is boosting those shares. Babcock is also upgraded at RBC, so we've got a kind of a double boost there, and 2.7% up for Babcock. Moving on to the Commerzbank. Commerzbank got downgraded at Deutsche Bank this morning, so that is sending the shares down about 3% for the German bank. And then finally, Vestas. We've got new IRS rules around clean energy projects, and they are actually a little bit more manageable than thought originally for Vestas. So that is sending the shares up quite a lot this morning. We're up almost 13% for Vestas.
I'm just trying to see what the GIP5 looks like in terms of the 5-day chart, to put it in normal language, for Vestas. It's up 15%. 15% over the last 5 days. The gap higher this morning is obviously significant. Earnings last week. It was interesting. Henrik was here. He was talking. He was sounding quite positive about the United States. And actually, maybe the regulatory burden is not going to be as great as anticipated. Stock really popping on the back of that.
Yeah, and a lot of these clean energy stocks, at least the ones listed in the U.S., the wind and solar stocks in the U.S. have been kind of all over the place. But on Friday, some of these names jumped around 30% on the back of this IRS update.
Absolutely. Just don't build a wind farm in Bavaria by the sounds of it.
Avoid golf clubs.
Avoid golf clubs.
As well.
Okay. Things to watch out for.
Especially hole 18, right?
Yes. Well, beyond hole 18.
Hole 18.
We're talking about Trump and Scotland, and he was upset by that. I think he'd be upset by this next story as well.
Yeah, coming up, the Airbus A320 is set to overtake Boeing 737 as the most delivered commercial airliner in history. We'll bring you the details. This is Bloomberg. Welcome back to the opening trade. Novo Nordisk blockbuster weight loss drug Wegovy received FDA approval for a treatment of serious form of liver disease. Excuse me. Its stock price is gaining this morning off the back of the announcement, jumping around over 3%. Joining us now to discuss this is Naomi Kresge. Naomi, is this a game changer for Wegovy?
Well, it's not so much a game changer, but certainly an incremental win for Novo Nordisk. For them, it's really about the competition between Novo and Eli Lilly, the American rival, between Wegovy and Zepbound, which is the Eli Lilly weight loss drug. And this is an indication that Zepbound doesn't have yet. And so in this group of patients, Novo will be ahead. It's incremental. I mean, analysts are foreseeing potentially an extra $1.9 billion of revenue, peak annual revenue from this indication. So it's certainly a boost. And let's say a win in one battle in this ongoing war between these two huge drug makers.
Naomi, good morning. It's Guy. How is Lilly going to get approval? How long is the window of opportunity for Novo?
So Lilly is also studying its medicines in this area. They're getting into late-stage trials, so we could see, some few years, potentially year or two of runway for Novo Nordisk. Now, one should note that there are other competitors coming up as well in MASH. There's one drug that's already on the market from Madrigal Pharmaceuticals. Boehringer Ingelheim is also working on a medicine in this area and has had some good data from their drug as well. So the Novo and Lilly are not alone in this group of patients, but this is a good, advance. Like Novo has leapfrogged the competition a little bit with this approval here.
Naomi, thank you very much indeed for the update. The stock certainly responding to this news this morning, as you say, incremental, but certainly positive. Naomi Kresge on what is happening with Novo Nordisk this morning. Let's turn to what is happening in the world of aviation. The Airbus A320 series, poised to overtake its competitor, the Boeing 737, as the most delivered commercial airliner in history. This, according to the aviation consultancy Cirium. As of early August, Airbus had shrunk the gap between the two competitors to 20 units, according to data, with the remaining difference likely to disappear as soon as next month. Remember, Boeing is limited in the number of 737s that it can produce at the moment. Airbus has a massive order book. Obviously, things are changing fairly fast. Anthony Palazzo joining us now. He covers this sector for us. Anthony, there's a 20-year age gap between these two aircraft, and it felt like since John Leahy introduced the Neo version of the A320, it has just been accelerating away from the 737. How big a moment is this for Airbus?
Yeah, well, I think it is a very big moment for Airbus. I mean, these two companies are the dominant plane makers in the world. The rivalry goes back 50 years, and when Airbus started back in 1970, Boeing was the king of the hill, and the rise of the A320 really parallels the rise of Airbus. It's been instrumental in equalizing Airbus's standing over the years, and really in the past 5 to 10 years, overtaking them.
Anthony, are we getting to the end, though? How far away is the next generation of narrow bodies? That's what everybody's asking now.
Right, and it's a good question. We don't have all the answers. Airbus, it's a little bit clearer. They've said that they want to launch a new replacement for the A320 by 2030. That means they'll have to choose on the engine technology right around 2027. And their target is to put the plane in the air by the mid-2030s. Boeing's timeline is a little less clear. They've said that they're thinking about this, but they've had so many fires to put out that they really need to get their house in order first. Yeah. That's the last we've heard from their CEO. They're making a lot of progress, and so we don't think they'll be too far behind.
Okay, it's amazing. The 737 first flew in 1967. Kind of gives you a sense of maybe the history here. The 320.
Yeah. I was going to say Lufthansa was the first customer.
Absolutely. Interesting transatlantic element to that. The A320, 1987, 20 years younger. Anthony Palazzo, thank you very much indeed. Coming up, we're going to focus on European defence and aerospace. That's next. This is Bloomberg.
This is the opening trade. We're 30 minutes in today's session, and we've lost a bit of momentum over the last hour or so. Eurostoxx 600 is in the red, down 0.1%. We're seeing some underperformance in the DAX and the CAC. Some key underperformers today are the likes of the banks and the insurance sector, so that's kind of explaining that there. The FTSE 100 is the key outlier in the green, up 0.1%. Guy?
Okay, reasonably balanced markets, 307 up, 207 down when it comes to the stock 600. Not a clear sense of direction emanating from that. Volume, despite the fact it's down by a quarter, is actually relatively good compared with what we saw last week. Val's bringing up the banks. Over the last few days, it has been the banks that has dominated the 52-week high list. There haven't been many 52-week lows recently. There are a few this morning. But the 52-week highs this morning look like this. More of a mixed picture. Ital gas. Interesting to see what is happening with European gas prices today. Actually heading lower. Telecom Italia unchanged at the moment, but up by a little bit. It says unchanged, but we are basically we're tracking a little bit higher this morning to a 52-week high. And KETTNER Group up by 0.6%. So we've got a range of 52-week highs today. It is not, as it has been over the last few days, very much dominated by the defence space and the banking space, Val.
Well, here's what else you need to know on this Monday morning. Bloomberg has learned that China's top envoy, Wang Yi, is traveling to New Delhi today in his first trip to the country in over 3 years. The visit is seen as an effort by Beijing to ease tensions with India and comes as President Trump's tariff policy pushes the two countries closer together. White House trade advisor Peter Navarro is calling the dramatic increase in India's buying of Russian oil since the invasion of Ukraine, quote, opportunistic and deeply corrosive. In an FT piece, Navarro linked India's trade barriers and what he characterized as its financial support for Russia, depicting dealings that come at the expense of the U.S. And lastly, European leaders will join Volodymyr Zelenskiy at his high-stakes meeting with Donald Trump today in Washington. Ukraine's leader is facing growing pressure from the U.S. to agree to a quick peace deal with Russia.
Well, let's pick up on that last story and go to Brussels. Bloomberg's Oliver Crook standing by to give us a briefing ahead of that meeting that is taking place in D.C. a little bit later on. Ollie, set this up for us. How should we be thinking about this meeting? What should expectations look like?
Well, I think that we should hope to try to get as much detail as possible about what was agreed to on Friday between Trump and Putin. What we've heard reiterated from the Trump administration was, in point of fact, that they agreed to nothing, that actually Ukraine must be making those decisions. Ukraine needs to be at the table. That is a very different tone than what some of the things we had heard in the lead up to this meeting over the last couple of months from the Trump administration. And that sort of way of doing business that Trump has now adopted is something that will come as at least a slight relief for the Ukrainians and the Europeans, despite probably their tacit, they won't say this explicitly, probably great displeasure to see Vladimir Putin walking across a red carpet in Alaska on Friday. But I think the most significant development that we had over the last 48 hours is an outline of some of the agreements that the United States is willing to accept in terms of its role potentially in a post-ceasefire, post-peace deal Ukraine, which is basically assuring security guarantees for Ukraine, basically giving Article 5 style NATO commitments that the United States would in some way back militarily the Ukrainians if ever there was a repeated infraction on Ukrainian sovereignty going forward. What I think is interesting is that this has been sort of styled as something that the Russians have agreed to in this meeting. Of course, Article 5 is not something that exists by Russian consent. It exists despite the fact that despite Russian objection. So the United States could have very easily a few months ago said, listen, we are willing to support Ukraine militarily and say we will give the security guarantees. But that is a position that has definitely shifted over the last 48 hours. If indeed the United States says explicitly it will come to Ukrainian defense if ever there isn't a further infraction on Ukrainian sovereignty after a deal is struck.
Ollie, overall, do European leaders and even Ukraine, do they view what happened on Friday in Alaska as a positive, as a moving step towards peace?
I think that they're going to spin it that way. I think that everybody, has learned the lesson in dealing with Donald Trump, particularly on the issue of Ukraine, whether it's the Europeans, whether it's Zelensky learning it really the very hard way in February this year, is that you never want to appear to be the obstacle to Trump's plan to a peace deal with the Russians. So what they will do is they will enlist all of their energy to try to spin what happened on Friday as a positive development. And I think that the fact that you have Emmanuel Macron, you have Friedrich Merz, you have Mark Rutte, the head of NATO, Ursula von der Leyen, Giorgia Meloni, Keir Starmer, all going to Washington, D.C. really does give exactly that. It gives prominence and momentum to this plan by the Trump administration. And with everybody sort of going there and sitting in the Oval Office, maybe they won't all fit in the Oval Office, but sitting in Washington, D.C. across from Trump, it makes it very difficult for this to not be a serious plan that gets some momentum going forward. What they will try to do is say that actually we're all willing to be participants in this conversation and be active members in trying to find a solution, but actually Putin is is the problem. That is the story that they're going to try to spin over the next 48 hours, 24 hours, and we'll see what we get tomorrow morning.
Ollie, great stuff. Thank you very much indeed. Our Europe correspondent, Oliver Crook, joining us from Brussels. European defence stocks, aerospace stocks, watching this story develop very, very carefully. Benjamin Heelan, head of European Industrials Research at Bank of America, joining us around the table to discuss. Good morning.
Morning.
If Europe provides security guarantees to Ukraine, how do I factor that into the European defence story from a stock point of view?
Well, I think if the Europeans do provide security guarantees, they're going to have to back that up with spending, they're going to have to back that up with equipment, and there is a chance they will have to back that up with troops on the ground, right? Troops on the ground in Ukraine, we had this coalition of the willing at the beginning of the year. France and the UK were the kind of early initiators of that. If you have troops on the ground, that's a decade-long investment. That requires logistics vehicles, it requires armoured personnel carriers. Yep. So I think that it just drives that investment story that we've had and just gives a lot more credibility to some of the numbers that have been talked about.
Would it offset, though, the kit that's currently being used in combat?
Yeah.
Like if there is a peace deal, a ceasefire,
yeah.
Those equipment that are currently being used on the front line, be it munitions or missiles or armoured personnel carriers or whatever, that kind of goes away to a certain extent. Do the two balance each other out?
So it goes away, but one of the big takeaways from the NATO summit at the end of June was inventory, right? We just don't have enough kit. Right, and so I think what you will see is that replenishment cycle. If you look at 155 artillery shells, that's a 10-year long investment cycle just to replenish to the kit that we need. So I think there is an argument that you will see, you'll put a low multiple on that revenue because you think at some point you're going to have replenished inventories, you're not going to need it. But I think the investment that you will see that really accelerates is things like air defense, hypersonics, and autonomy. Those are the really high-tech, leading-edge sort of areas of investment that governments are going to, once they do that reinvestment cycle on the land side of things, are going to continue to invest in, and that has the longer growth trajectory, as I see it, over the next 10, 15 years.
Ben, do you think that perhaps alongside this European defense rallying continuing, that U.S. defense stocks are going to rally? And in that comparison, what's the most mispriced in a bullish outcome?
Look, I think the US comes down to the US budget, right? The US defense stocks, it's 80% of the revenues for them. So that comes down to the outlook there. There's obviously growth this year. There's a lot of question marks around growth over the next couple of years in the US defense budget. We are super positive that there will continue to be growth in the US defense budget over the next couple of years. I think for the European side of that theme for the US defense stocks, what you're seeing is a lot of them are actually partnering with the European defense stocks because Rearm EU, what the European Union has talked about in reindustrializing the defense base here, they want to spend the money in Europe. So actually, I still think the bigger opportunity here is for the European defense stocks because that's what the European governments, that's who they want to invest in. That's where they want the capacity to be grown. Okay,
and in sensing that upside, are you also watching just how quickly these governments turn around and spend this money? You know, they promised that 5% of GDP for NATO, but over what timeline? Obviously, the market wants them to spend that as quickly as possible to see that kind of PE re-rating.
Yeah.
What kind of things are you watching to make sure that these governments are really going to stick with their word and putting that capital to work?
Look, a lot of it is going to come down to the orders, and one of the big takeaways from the Paris Air Show this year was that France is going a little bit slower than people had hoped. Germany was going very, very quick, right? And I think that when we get the budget agreed and signed in September, when you speak to the companies exposed to that German defense kind of theme, Rheinmetall, Hensoldt as an example, the orders are very, very significant, what is being talked about, what is being prepared. You've seen all these leaks in the press, Handelsblatt, the FT, talking about, 6,000 Boxer vehicles and that sort of magnitude of stuff. So I think actually what you're going to see is Germany is going to be the big focus in the second half of the year because the numbers that are being talked about there, Rheinmetall's talked about 70 billion euros worth of orders just in the next 12 months, largely coming from Germany.
How much? But it sounds like we know a lot.
Yeah, we do. Yeah.
So the market's priced a lot of this already in. So how much, therefore, headroom is there on some of these stocks which have had a fantastic run?
Yeah, so we've seen actually about a 15-20% derating just over the last kind of couple of months. Once we hit NATO summit, kind of the stocks have all kind of derated a lot. I'd say two things, right? One, if you believe in the investment cycle, these stocks are very, very cheap, medium term, right? But you have to believe in that 5-year investment cycle. We do. But when you're getting these stocks at mid to high single digit EV/EBIT valuations in 2028, 2029.
You need those earnings to come through.
You need those earnings to come through, but that is attractive if they do come through. The second thing is we've talked a lot about the flow picture, and last time I was on here we talked about ESG flows. You know, the analysis that we do, those flows have still yet to happen, and I think what you've seen is a lot of the European asset managers have written to their clients, we're going from Article 8, we're going to be investing in this theme of sovereignty, but that flow picture hasn't actually happened yet. That's going to be a September, October event. So we still think as a firm there's about $70 billion of flow to normalise in the second half of this year just from that ESG money equal weighting the sector in Europe.
Ben, can I ask, you know, we have this meeting in D.C. today between Zelensky, the European leaders, President Trump. Is there any outcome today that would maybe make you double think your bullish view on European defence? Like, what would be the worst outcome for these stocks in this decision, in this meeting today?
Yeah, I mean, tough to frame that. I mean, what I would say is a lot of this, from a European perspective, comes down to this infraction on sovereignty and the loss of territory, right? And so Russia is obviously occupying a decent chunk of Ukraine right now. If Ukraine is needed to kind of just recognise its lost control of that doesn't change why Poland, the Baltics, and Germany and the UK and France are stepping up from a defence perspective because, you know, you've basically invaded a country and you will keep that territory, right? That's obviously a terrible, terrible message for the countries in Europe. So I think actually you don't see any really big changes in why governments are moving to this 3.5% on hard defence spending over the next couple of years.
Civil versus defence. How does it? What's the picture at the moment? There does seem to be there has been a really big move into the defence stocks in Europe. Yeah. Has that been at the expense of the civil aerospace side of the business?
Yeah.
What happens next in terms of? I'm hearing more positive noises coming out of the States in terms of demand there. Just update me on what your current thinking is on Airbus, Boeing.
Civil is in an incredible market position, right? Aftermarket growth, whether it be Safran and GE and Rolls-Royce, just continues to be double-digit. Pricing is good, demand is good. I think for me, the big focus of the second half of the year is going to be supply chain, and that's going to be the big inflection. It's been a story for the last 3-4 years. Yep. I went to the Paris Air Show. I was in New York with Airbus a couple of weeks ago. It really feels that you're at a point now where there are maybe 2 or 3 sticking points, which is engines and the Spirit Aero deal at Airbus. But once you get through that, things are moving in a very, very positive position. You know, Airbus is already producing today at pre-COVID levels. They just can't deliver them because they're still waiting for the engines from Safran and GE, and that feels like it's coming and is meant to have normalised by the end of October.
So we exceed deliveries this year?
We won't exceed deliveries this year. I think they will be around that guidance level, but they won't do better than the 820. But next year, deliveries should be better than what we did pre-COVID as that engine situation catches up.
OK. Nice to see you.
Yeah.
Thanks for coming in to see us.
Cool.
Benjamin Heelan, Head of European Industrials Research, joining us from Bank of America. Coming up, with temperatures forecast to reach 44 degrees in some parts of Spain today. We're going to have the latest on the wildfires being fought across the region. It's affecting the whole of southern Europe at the moment. We think it's going to get cooler in Portugal today. Spain remaining very, very hot. That is what we're going to talk about next. Is there an economic effect of all of this? We'll discuss that. This is Bloomberg. .47 minutes into the equity market session, European equities softer and have become more red, I guess. I'm trying to think of the right words to describe it. My brain is clearly not functioning this morning. We have softened up since the open this morning. We were anticipating a flattish open. That has deteriorated a little bit. I have to say the German market's under a little bit of pressure. Commerzbank is down today. Crosstown rival Deutsche downgrading that stock. So Commerzbank is being hit on the back of that news, which is dinging up the German market a little bit.
Well, one share attracting a lot of attention and is surging nearly 14% is Vestas, the biggest gainer on the stock 600 this morning. This is after guidance issued by the U.S. IRS on tax credits related to clean energy projects was deemed by analysts to be far less onerous than feared. To discuss this further, we're joined now by Bloomberg's Sarah Sholin. What are the biggest takeaways for investors? There's been a lot of back and forth on this regulation, whether it be a positive or negative for the clean energy industry.
Yeah, in general, the policies, the takeaways in the US have been such a big uncertainty for the wind power industry and specifically Vestas that has the US as its way biggest market. So this is definitely the worst case scenario that has now been taken off the table, and that's why we're seeing the shares rallying. Now we expect a flurry of US orders to come in next year, the year after, and we're really probably going to see a lot of activity for the company over the next few years in the US.
In terms of less bad, when somebody says less bad for me, I still hear bad. How difficult is the environment going to be for Vestas? Henrik was on the show, the CEO, the other day, sounding quite positive about the United States. What does it look like over the next few years for this business?
Exactly, and I've talked to Henrik as well, and he is quite positive on the US market. He did say when I talked to him a few months ago that regardless of the legislation in the US, it is a big market that has a big energy need over the coming years, coming decades. And clean energy and also green and wind energy will be part of that narrative to meet those energy demands. So regardless of what was going to happen for the US in terms of these new rules, IRS guidance, he was really positive on the US markets. This just takes away a big negative and a big uncertainty for the stock. And the stock was trading at a level where investors pretty much were expecting no new US orders to come in, and that's probably not going to be the case now. Now we expect to see a lot of the wind farm developers, they're going to put in orders so they can really get these projects in before the tax credit may run out at the end of the decade.
Sarah, what is the next catalyst for this industry as a whole now that this clarity from the IRS was gained? Is there something else that could possibly pose as a risk event to the clean energy ecosystem?
Something that we're really watching over here in Europe is a competition. Denmark and Vestas, they have been sort of the forefront of wind energy and clean energy, but now we're seeing a lot of competitors come in, specifically from China. They also have really strong industrial policies when it comes to energy and meeting the increasing energy demand over the next generations, over the next decades, where in Europe it's been, when I talked to Henrik, at least that's what he said, it's been uncertain for him where Europe wanted to go in terms of their industrial policy in energy. So he wants Europe to create these big champions in green energy and wind energy to compete with specifically the Chinese competitors.
Sarah, we're going to leave it there. Thank you very much indeed for the update. Stocks certainly moving on this morning, now up by 14% on the Danish market. Sarah Scholin joining us out of Copenhagen. Let's talk about, you could argue, the other end of this story. Spain grappling with record-breaking wildfires as temperatures soar across the country. The Prime Minister, Pedro Sanchez, is now calling for a nationwide climate pact to coordinate government effort. He wants to deploy hundreds of troops as well to battle the blazes that you can now see pictures of. Bloomberg's Rodrigo Orihuela joins us now. Just talk to us about, I want to come on to what he's talking about, the Prime Minister, in terms of the effort that's going to be made. Rodrigo, how bad is it in Spain right now? How hot is it? How bad are the fires? Is there any end in sight in terms of what we're seeing?
So it is really bad. I mean, all forecasts have that this will be by far the worst year as far as the number of fires and the impact they have in Spanish history since records began. We are talking a huge surge, and the issue isn't as much about the size of the area it's covering as it is about how many fires are going on at the same time. And that is the main issue. I mean, numbers vary, but you could say that there's basically about 40 different major wildfires on right now. The main one is in the eastern area of Extremadura. So it is a really high concerning situation. The defense minister just spoke a few minutes ago. She oversees, obviously, the army, and the army in Spain has a special division which acts in natural disasters, as in this case. And she says that this unit has never seen anything like this in its 20 years, and that we have to accept that some of the fires will not be able to be controlled unless there is a change in the weather. There has been a huge heat wave in Spain over the last 2 weeks. Some areas saw about 45 degrees over the weekend. The forecast by the weather agency is that will start changing early this week, but obviously nobody knows if that will be enough to stop the fires.
Rodrigo, just walk us through. We heard from the Prime Minister of Spain saying he's been urging for a nationwide pact to unite all levels of government to fight wildfires. Why is this something that doesn't already exist in Spain?
So basically, you have two different situations here. One is that Spain is an extremely decentralized country as far as political powers go. So there are some powers that lie with the central government and others that lie with the regional governments, which are roughly equivalent to states in the US. Now, what happens is that given that most of these regions are controlled by the opposition, what we're seeing right now is that there is an extreme amount of political bickering going on about whose responsibility it is or isn't to control and to fight these fires. It's quite striking to see the situation going on right now. So that's one phase. Who is responsible and what should each of the political powers be doing? The second issue is that many of these regions are controlled by the main opposition group, the PP, a conservative party which has been in and out of power with the socialists for decades. But in many of these regions, they govern with Vox, the far-right group, which is very anti-climate change policies. And so the PP has started picking up some of these elements. So right now, Sanchez and his government are talking about how this is mainly down, a situation that's mainly down to weather changes, to climate change. And in the PP, and especially in Vox, they're saying this has nothing to do with climate change, it has to do with political management. So you have these two big situations. On one, who's responsible for this? On the other, whether or not this comes down to climate change. And Sanchez was kind of hinting at that. However, it's something that happens in one way or another with every one of the crises we have seen in Spain of different sorts over the recent years.
All right, thanks to Bloomberg's Rodrigo Orihuela joining us on the story out of Madrid. Thanks so much. Let's take a step back and get you set up for your trading week. There is a big risk event on the horizon that is today with Zelensky and European leaders in D.C. to meet President Trump after his meeting with Putin on Friday. Attention then goes to the UK on Wednesday, UK CPI. Thursday, the global flash PMIs out across the world. Attention on manufacturing and just how that's handling up on both sides of the Atlantic due to tariffs. Walmart earnings starts a slew of retail earnings out of the U.S. Later on Thursday. And on Friday, it's the big one. Jerome Powell will be having his Jackson Hole keynote address at 3 p.m. on Friday.
I hope he lives up to expectations. We kind of big these things up all the way throughout the week. This is the keynote event. This is going to be what you're going to want to watch on Friday. Sometimes he just talks about kind of academic research. You could go down the rabbit hole of what does immigration do and how does that change the narrative. There's lots of ways that this could go. It was interesting, Mark Carmel was saying he expects this to be an event. And I guess saying nothing could be conceived as hawkish. I don't know.
Well, I mean, saying nothing kind of implies that he'll still characterize the labor market as solid. The market wants to hear from him that these payroll revisions mattered to him, because it seems like some people who sit around here on the table totally want to shrug it off, the weakness of the labor market that we've seen in those payroll revisions, which were the biggest in decades.
Yeah. If you back out, what I'm curious to find out is if you back out immigration, what is the long run rate you need to have a stable US labour force at? Obviously, it's going to be much lower than it was over the last few years. Is it 65? Is it 75? What is a steady run rate for the US economy? Because that kind of benchmarks our expectation going forward in terms of the payroll numbers that we're going to be watching.
Yeah, and the theme of Jackson Hole is labor market in transition. So maybe we'll get that kind of color from him on the labor market.
Yeah, the immigration story is going to be quite significant. Busy week coming up, main event Friday. We've got all of that covered. We're going to carry on the coverage. The Pulse is up next. This is Bloomberg.